So first up today, you guys, we got Homebuyer Demand pushes mortgage applications higher even as interest rates inch up again. And I'm going to highlight inch up again. These are not wildly going through the ceiling like they were. They literally are inching up by the most smallest of bits and increments. This one came from CNBC. Average contract interest rate for 30-year fixed rate mortgages with conforming loans balances increased by 0.03%. It's almost nominal, nothing. It's very small. So has this changed anything for you guys here locally yet?
No, it's just headline, right? It's just...
It is. No, 100%.
It's just headline. What are we talking about this? Okay. It's just a little bit.
You're saying they're shy on content? Is that what you're saying?
Probably. I mean, I don't know.
CNBC?
Same old here. It's going to change your payment. I mean, if $1 million, it'll probably change it maybe $50, if that.
80 cents a day. Yeah.
80 cents.
Hell yeah. Call your loan officer. Refinance.
Yeah. So applications to refinance a home fell for the week, but they were also lower the same 1 week ago, or lower than the same week 1 year ago. Let me get that right. But it didn't really seem to deter home buyers, is what the takeaway was from this one, who, after the holidays and also seeing kind of the highs of the fall 2020, they're like, hey, this is kind of a range I can do, and I'm back in the game.
Again, it's just that FOMO, right? It's the beginning of the year, so it's just a little bit. It just increased a little bit. So people are, little. So it's like, it's not going to deter the person like, okay, I'm not going to buy it right now because of that. It's just, they've already, I think what people have listened to is last year's comments from the Fed.
Yeah.
We're already going to, do a rate cut 3, possibly 4 times. Mm-hmm. So I think that's actually in people's head right now is that's what's going to happen. So I'm okay to still stay in the game right now, apply, and just kind of put myself in a better position.
And earlier we were having a conversation, and I feel that 2022 going into 2023, there was a lot of uncertainty, not knowing what was going to happen with the Fed, the government, rates, and whatever the direction of the market. But people went through a whole year. We kind of got an idea of what happened, the ups, the downs. We got a really bad October. We touched the hot pan. We didn't like that. And we started digressing. Rates started to come back down into the end of the year, only to start spiking up a little bit. But I feel that the difference is that people already have last year in their belt. So they already know how bad it could get or how bad it got. And now I feel that their situations and, their life circumstances is prompting them to, make a move, take a move. But at the same time, these rates are just headlines.
Yeah, no,
it doesn't move anything.
At the same time, it's not bad. It's kind of like, okay, cool. And, as the article says, it's like it didn't deter people. Yeah. I think 2023 was just a very difficult year for a lot of people. And just the mindset of adjusting, trying to understand and, understanding that new cliche that came out. Don't marry the rate, marry the home. Yeah. I think that's something that really resonated in people. And now they're actually understanding the true value behind that.
Yeah. Well, and mathematically, a lot of people were eliminated just because affordability was like the lowest in 40 something years. I don't remember. It's one of the previous episodes. I don't say 42 years, but something like that. I don't know. But I think that what you're seeing is you're seeing behavior come back, and people are like, okay, well, if this is where things are going to settle, this is where the dust is going to settle after all this, then I have a decision to make. And so what I think I'm starting to notice, and the data doesn't really say this so blatantly, but you can kind of put pieces together. I think people are coming off the fence because they're like, fine, you know what? I wasn't going to get it in 2023. I am determined to get into a home, so I'm going to try right now.
Yeah.
I'm going to give it a shot.
Yeah.
And also the tonality for which people look at housing now has also changed. Hey, I'm going to live here, then I'm going to really live here. Yeah. I'm not just trying to buy a place that I'm going to sell in 12 or 24 months. This isn't the market for that. This is for the long-term buy that you're going to hold and either live in it yourself 10 or 15 years, or you're going to hold it for still that long, and maybe at some point it turns into investment for you.
I mean, Andy, it's a little bit of everything. I mean, right now we're talking about long-term hold. As a matter of fact, I'd like to go through this actual true situation we're in right now. It's a property in Paso Robles near where there's a lake and then there's ocean. But the property has a cracked foundation, and you can totally tell this is a totally rehab, right? Like you have to renovate this property. If you look at it, you're like, whoa, this needs a lot of work. Anyhow, $550, client submits an offer. We're doing hard money on this. In this case, we just got to counter back. Are you willing to go up to $640? Higher. We're between $640 and $650 right now, pretty much, because they can't really disclose where you're at. But it went up $100,000, guys.
What?
Just like that. And the property needs about $110,000, $120,000. So that's where we're at right now.
Wow.
It's crazy, And this is for an investment property, not an actual somebody that's going to go in there and occupy.
Yeah, like it's not an owner-occupied deal.
And that's just to tell you, if investors are going that aggressive, it's just kind of telling us where they feel the market's going to go. Because obviously these people, this is what they do day in, day out as well.
And I think this is something that we should probably like really be blatantly clear about with people who are looking to buy a house, is you are in the arena with these people.
Yeah.
They have the money, they have the investor, they have the deep pockets, and they have the, the tenacity or competitiveness to go and try to outbid you.
Yeah.
And that is what's happening in some cases. It's not all cases, but this is a great example. Glad you brought it up. Didn't know you had it in your back pocket for today. But this is going to be happening. Yeah. You're going to see bidding already happening between people who are trying to buy for their owner-occupied house. But then you're also in the room with people who are like, I'm buying this as an investment. Mm-hmm. And we had a comment. We had a nice little exchange with somebody in comments a couple weeks ago. Are talking about, house prices need to have a 40% correction. Yeah, okay, I can maybe mathematically agree with you. However, someone's going to step in with money at 20% off and 25% off before you get to 40, and you will have a chance at it based on your theory.
Yeah.
And again, I'm not saying the theory is wrong. I'm just saying the behavior ain't going to play nice.
And I agree. I agree with them. It would be nice to see a 40% correction there.
But what would we do?
Can you give me 3-4?
What would we do? Everyone would come. We'd come in.
Exactly.
I'm interested at 20% or 25% even. But I'm not going to see 40.
But even then, like you just said, as soon as it drops, oh great, you just made it even better for the investors. They can come in with more money down and overbid everybody out.
And then there's the flip side of that coin is you got this place that needs a bunch of work. It sounds like it's got a lot of serious work that needs to be done. You're talking about it needs $110,000 work.
Who has that?
And they do. But also
who's they?
100% or $100,000 more than what the list price is. So now we're talking about $210,000.
Correct.
And then still it means that the value upon completion and repair is still north of $1 million. So there's enough scratch in the game for them to do that still.
Yeah.
And for investors, they're like, as long as I'm profiting and it still makes sense for me, it doesn't matter if I'm profiting X, Y, or lower or higher. They're profiting.
Yeah.
No, not lower, higher.
Lower, higher. Yeah, no. You said, earlier, like, the highs and lows of 23. I'm like, no, they're just highs and higher.
Highs.
Highs and higher. There it is.
High and high. Well, no, absolutely.
The interesting thing also here is that, like, we had been seeing already at the turn of the year, now that we're at the end of January, you look at all the end of quarter 4 data has been coming out now, and from November, and you start seeing December data start coming out about housing, and it's like, listings started coming back up. Buyer applications started increasing. Interest rates are down. It's like all of these things are steamrolling.
Values are going up.
Yeah, values are holding and going up. And it's like, I don't even know that we're going to get through the winter before we start having spring activity. I feel like we're seeing spring action.
I heard spring's here already.
That's what I'm saying. I think we're seeing spring action now, and it's like it's January. We still got a ways.
So I have HomeBot, right?
Yes.
It kind of tells me on a regular basis, on a weekly basis, where we're at. And my house that I bought back in 2012, it shows right there, it's gone up 159%. I was like, wait. Are you serious like that? And then the other property that I bought, actually, it's crazy on the zip codes, right? 91914, where I currently live. Yes. And then 91913. 91913 was only 129. Only 129.
129,000.
Dang it! Where's that 30%?
129%.
But I bought that. Mind you, I bought that back in 2005.
You had that one. Yeah, I was like, you had that one a lot earlier, though.
Yeah. So that's the thing, right? Right now, if you're buying, a lot of people, here's the rent versus buy. My rent or the payment's going to be higher. But the thing is, you're investing in it. We can say in 5 years, you'll probably make about 150, 200,000.
Yeah, easily.
So what are you going to tell people right now when they're qualifying? They're coming to you guys and they're saying, hey, look, I want to buy a house in 2024. What are you telling them as far as like rate range? Are you saying, hey, look, let's qualify you at today's rate and then maybe a 0.5% higher or a quarter? Like
No.
What's the range, guys?
For me, like for government right now, it's between 5.875, depending on your credit score, 5.875 to 6.25. And I always tell them, like, listen, I don't want to have to approving you, so I'm just approving you at the max. So I'm going to be at 6.25, right?
Yeah.
Low
Everything
credit score.
Yeah,
it's like 6.21 or something like that, the last one I did. But anyhow, I just kind of give them an idea, and I tell them right now, the rates, they'll change drastically. On day in, day out. But for now, just keep it at that. And I give them that calculator where they can actually figure out what their payment's going to be. So when they find a home, they can just plug numbers in. Yeah. Oh, okay. I want to pull the trigger on this or not.
Similar. That loan comparison worksheet's been coming in handy. How many years have we been using that now?
It's been a long time.
I think 2009 or 10.
Yeah, it's like 9.
It's been a long time.
Three payment scenarios.
I love how simple it is.
No, and similar to what William said, I
Good
think
creation.
yeah, it's still going hard. I still use it. No, but similar to what William was saying, I like to give the clients the education of how rates move, and then put them with the 10-0, because then they understand what's happening, and I'd let them know like, hey, this is the reason why rates are moving, but I'm also going to give you the data so that you could also see what I'm seeing basically. And I like to take them through a best case, worst case, and then a missed case scenario, so they have the range of all the payments. And then at the end of the day, I tell them exactly like William, it could go up, it could go lower, but at least now you know where all the range of the payments are going to be.
Yeah, you get the worst case scenario. And obviously, we do follow the market conditions, we see where they're at. So when we are locking a rate, we're not just flipping a coin and thinking, today's the day.
Hey.
No, we got to analyze all the information before we make an informative decision.
So on this topic of like home buyer demand, coming back and more applications coming in, I know we have more escrows that are opening already.
Yeah.
What are some of what is like a behavioral change you started to observe, or maybe a mental shift, mentality commitment people have made? Like, what are you already seeing now that you think is going to be trending through the whole year?
I think the mental side of it is now they're understanding that the rates do go down. I think when people are first getting in, they're thinking, hey, the rate's going to be like at 7, right? 8, like it was in October. Now they're understanding that's not forever. So now they're truly believing themselves that, okay, you know what? You're right. The rate will go down. 6-8 months, we could revisit the conversation. I'm kind of going into this with the worst case scenario of being able to carry the cost for 6-8 months, see where we're at. But at least now I know that if I can carry that cost for the next 6 to 8 months, even a year, when the rates go down, it's going to make it that much easier for us. So maybe they stick to the dollar menu at Jack in the Box or McDonald's like I did when I first bought it. You know what I mean?
It doesn't even exist anymore. It's like the inflation menu.
Yeah.
You want to look at look at inflation. Look at the dollar menu. It doesn't exist anymore.
The last part, at least for my thoughts on this one, for this segment is, also we have to remember ourselves, but also remind everyone watching, like that means there's sellers in the game too.
Yeah.
That's great. There could be mortgage demand through the roof, but if there aren't sellers engaging in listing their houses, it doesn't matter.
Yeah.
So the other side of this is, are there sellers showing up? And the data is already showing that, the sellers already started showing up in December. And then you also see that we're going to talk about price cuts have been become less and less price cuts. You see housing values stay the same or going higher, like you're talking about, and more listings come into the market. So it seems like everyone's kind of agreeing it's time to play ball again. Let's all circle back up.
The crash is not coming, Andy.
Markets. Let's start.
The crash is not coming. We're not seeing.
Wait, what
crashes.
crash?
Yeah,
what crash?
Exactly.
What crash?
Yeah, but
the only crash was the volume.
The volume.
Oh yeah, there you go.